Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is November 29th, 2018. I've been talking a little bit about the grains today, and specifically I'm going to be looking at soybeans this evening. The ETF is SOYB. The reason we're talking about that is that we have a trading range that is both pretty tight on the daily basis and on the weekly basis. So from that perspective, I think something big is going to start to happen here. The trends are all pointed to the upside. The technicals are pretty strong. Nothing showing as being overbought or oversold for the most part. If we take a look at the deep dive patterns, just recently we had a flow low, which was a profit taking, and so this would indicate that the market obviously wants to head a little bit higher. And when we take a look at the deep dive weeklies and we look at the patterns here's soybeans, and I mentioned that we have a tight trading range on the dailies. Well, we also have a lazy day 13-week sideways consolidation where the market didn't get overbought or oversold. If we actually take a look at the market, here's daily bars here for soybeans, and you can see that the extended daily bars have been nothing but going sideways. We have the resistance that we're at right now, which is at 904 and 5/8. That's the level that we want to break above. The higher level obviously is a little bit higher up here. That's at 933 and 7/8. So it's those particular levels, which are pretty far away from at least the second one here. But if we're able to break above, get the 50 EA, which is this yellow line, starting to really start to head higher, I think that eventually we're going to intersect with the 200-day, and that, my friends, would be a good trade if we're able to break above this level, approach this level, and eventually approach the 200-day moving average. So the fact that the market is quiet, the fact that the market has been this sideways consolidation on daily bars, and here are weekly bars, which it's a little more pronounced here. You can see that the market really has just been moving sideways for quite some time. Yes, we had some volatility back through here, but for the last 13 weeks, we really haven't been overbought or oversold, and we've been sitting and been building out this support level. So we could very well see a really nice jump to the market. If we take a look back here at the website, where our depth gauge, which is a longer term indicator for us, this one just recently started heading a little bit higher. So right now the condition is bullish and rising, and that's always a good sign for follow through for the market. And based upon what's been taking place, here's soybeans here in the middle, we're long that market just with one system netting together, but we have a nice open position profit, a little over 10 grand there. For the sector as a whole, we're doing pretty well, 14 grand in the shorts that are out there in corn, and with wheat we've got two systems that are short, up around 12,000. But I think that for the most part, soybeans, the odd one here, is long while the other two are short. The other thing I'll point out here is that I haven't shown this for a while, but these are our targets for the market. So here's today's close, and what this will do is it'll give you the indications as to where the market is finding a little bit of resistance should we actually head a little bit higher. And when you get this S, that means strength down here, and C for count. So we have a strength of 114 and a count of 3. That means based upon our 120, our daily, and our weekly bars, we look at support and resistance. We look for a little bit of an overlap, and when you get multiple counts like this, a count of 3 and the strength of 114, that's where the resistance is. If we can start breaking above certain levels, I just want to point this out, and it's going to take a while to get there, but there is a gap, a resistance gap, that if the market really starts to rally, and that can happen with soybeans, that there's a lot of nothing preventing us from going from these lower levels way up to 928. I'm not suggesting that's going to happen overnight by any stretch, but I always like when the market is trending, it's consolidating, it is kind of in a mode where it could get explosive, and anytime we can see some type of a resistance gap to the market, it always bodes well for a big thrust to the market. So with that, what I would suggest is watch soybeans. I pointed out that we have a really good ETF, SOYB, that if you're not interested in trading the future side, you want to do it with an ETF, that's being a long one, you can start to take advantage of that kind of a condition. So we'll see how things kind of play out here. We'll watch the systems, which are long, and from that side, we will take a look at some more markets and some more content on the website and some upcoming videos. So thanks for watching. Bye-bye.